All right, welcome to Talk Tickers. Today, we are digging into Snowflake's Q3 earnings from December 3rd. And boy, is it a classic Wall Street story. The company reports great news and the stock tanks. So let's get right into it and figure out what happened.
Okay, let's start with the top line, revenue. They pulled in $1.21 billion. Now that's a solid 2.7% beat over what the analysts were predicting. By any measure, that's a really strong start.
And the good news keeps on coming when you look at the bottom line. Non-GAAP earnings per share came in at 35 cents. The consensus on the street was 31 cents, so that's a nearly 13% upside surprise. I mean, so far so good, right?
Well, this is where the story takes a sharp turn. In spite of beating on revenue and beating on earnings, the market's reaction was not good. The stock just dropped like a rock, down about 8% in after-hours trading.
So that brings us to the big question, the mystery we're here to solve. How on earth does a company report what looks like a fantastic quarter and then immediately get punished by investors? Let's unpack this thing.
So here's how we're going to do it. First, we'll get into the numbers. Then, we'll cover the big AI story that management is so excited about. After that, we get to the real heart of it, the guidance. And we'll wrap it up with our thesis for what to expect next. All right, let's kick things off with the numbers. We're going to take a closer look to see just how strong this quarter actually was on paper.
And the strength was really consistent. I mean, look at this. Total revenue, a beat. Non-GAAP EPS, a clear beat. And this is the big one. Product revenue, that's their core business model. It also came in ahead. So from a pure execution perspective, Q3 was an absolute win.
And when you look under the hood, the business looks incredibly healthy. That net revenue retention number, 125%, is just best in class. It means their customers are sticking around and spending a lot more money. And then there's RPO, which is basically their backlog of future deals. It's up a whopping 37%. That tells you their sales pipeline is absolutely humming.
Okay, so the numbers look fantastic, but what's the story they're telling? Well, on the earnings call, management was laser-focused on painting a super bullish picture, and it was all about one thing, AI.
And this quote from the CEO, Sridhar Ramaswamy, really says it all. They're telling the world, hey, we're not just a place to store your data anymore. They see Snowflake as the absolute foundation for any company that wants to get serious about artificial intelligence. It's their entire strategic pitch right there.
And they're backing it up with some pretty impressive numbers. Snowflake just hit a $100 million AI revenue run rate, and they did it a full quarter earlier than they expected. They said their Snowflake Intelligence product is the fastest ramping product in the company's entire history. That's a massive sign that customers are actually buying in. They're also making some really smart moves by teaming up with other big players. We're talking a huge deal with Anthropic, getting cozier with Google's Gemini models, and working even closer with Accenture. They're not trying to do this alone. They're building a powerful AI ecosystem. Okay, so we've got a great quarter. We've got a fantastic AI story. Now, let's finally get to the reason the stock dropped. And it all boils down to two things, their forward guidance and a stock that was, to put it mildly, priced for perfection.
So here's the disconnect, right? On one hand, the bulls can point to the fact that, hey, they raised their guidance for the full year, and their Q4 guide was technically above what analysts expected. But, and this is a big but, the bears saw that the size of that beat was smaller than usual. When you've got a stock that's already shot up 70% in a year, investors aren't looking for good, they're expecting spectacular. And guidance for growth in the high 20s just wasn't spectacular enough.
And honestly, this headline from Reuters just nails it. The outlook wasn't bad. It didn't signal some big problem with the company. It just wasn't ambitious enough for investors who had already bet on a flawless, mind-blowing future.
And this chart right here puts everything into perspective. Just look at that 70% run-up for Snowflake this year. Now look at other software stocks, or even the S&P 500. Snowflake was in a different league. It had set this incredibly high bar for itself, and any little hint that growth might be moderating was going to cause people to take some profits off the table.
All right, so let's tie this all together and look ahead. What should we be watching for next quarter? Let's lay out our thesis for the next earnings call.
So here's what we think is going to happen. First, for the Q4 results, we expect they'll hit that 27% growth number, maybe beat it by a little. Second, the stock price itself is probably going to trade sideways for a while. The market just needs to get used to this new normal of high 20s growth. And third, our main thesis is this.
The long-term AI story is totally fine, but the days of Snowflake blowing guidance out of the water every single quarter, those might be winding down as the company gets bigger.
So that brings us to our final rating, market for form. Look, the company is doing great things, and the AI opportunity is very real. But after the monster rally this stock has had, we think for the near term its performance is more likely to just track the overall market instead of continuing to crush it. The story here is shifting from explosive growth to just plain durable growth.
And of course, the obligatory reminder, this analysis is for informational purposes only, and it is definitely not financial advice.